Welcome to BYOB Market Talks. This call is really designed to really help you understand the market and utilize the tools. And this is Be Your Own Bank. BYOB is the largest economic empowerment movement in the history of mankind. I am Tasha M. Dyer, the trade whisperer, creator of the BYOB Cashout strategy, the strategy that we are discussing, the strategy that we are going through, that we are going to be covering here. So as you log on, I see you all, right? I see you here, YouTube, Facebook, I see you all. Go ahead and make sure that you drop it in the chat, and we're gonna go ahead and get started. So let me recognize, let's see, who do we have on the line tonight? I see Jacksonville. Good evening, Minnesota. Good evening. Toledo, good evening, good evening. Orlando, Tavares, good evening. Moultrie, Cleveland, good evening. Good evening, Cleveland. Good evening, Miramar. Good evening, California. Good evening, good evening. Now, I know it's more than you all on the line, but that's okay. Guess what? It's your affirmations. It is your 6 figures in 6 months. It is your mindset. It is yours. I cannot force you, but what I can do is encourage you, but I can't force you, okay? So the affirmations are significantly important for you all to walk, right? Mindset is so important, right? Mindset is so critical, and mindset is so very important. And I just really need you guys to really understand just how significant and just how important that is. You know, I just really want you guys to understand that. So, I mean, just think about it. We're all here because we're ready to learn a skill set. We're here because we're ready to be empowered. We're here because we're ready to take this to another dimension. And that's ultimately, right? That is ultimately. And so this is, you know, I was reading and I heard a quote, and I want you to understand why mindset is so important. And it says, millions of people are concentrating daily on poverty and failure and getting both in overabundance. I'm gonna read that one more time. Millions of people are concentrating daily on poverty and failure and getting both in overabundance. So that's not who we are. So the reason why we do affirmations is to help you concentrate on what you want to manifest in your life. The reason why we do affirmations is we want you to concentrate. If you speak anything negative, if you speak doubt, if you, even regardless from whether it's trading to sharing this information with somebody, whatever it is, if you speak, well, but maybe, you're living in excusitis. You're living in negativity. You're living in doubt. We want to make sure we live in abundance and we're anointed for wealth. So what are our affirmations? This is why we talk about these affirmations all the time, guys. I just want to start the call with that because only like 5 of you guys dropped it. It's way more than 5 people on this call. So I am an educated BYOB master trader, anointed for wealth. I am the signal. All my trades in profit. I am 777. I see you guys coming through. Good evening, London. Now, let me talk to you about dedication. What time is it over there? What time is it over there? Oh my goodness. So, you know, to me, that's a shout out, testimony, a salute, because what that says is there is no such thing as an excuse. I'm going to show up and I'm going to do what's required. I'm going to show up and I'm going to do what's necessary. I'm going to show up. And so we're showing up and you're showing up. So I salute you. Now let's go ahead and dive in. Now, if you're new to the call this evening, if you're new to Be Your Own Bank, you're new to Market Talks, let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. Let me get a 111 and a 222 as I share my screen. All right, I have it here. Let me see. All right, so let me say welcome, welcome, and welcome back. Welcome, 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 and welcome back. So now, as you all, right now, so tonight is the advanced training. Well, I'm gonna slow it down because we're gonna walk through this in steps, right? I'm really gonna slow this down because we are gonna walk through this, okay? That we really are. But we're gonna walk through it in steps. And what I'm also going to do is I'm going to pull up one of the tools Now, because we talked about tools training, and once again, we might end up doing it again next week as well. Just depends on time, how we go, how the questions flow. But we're gonna take our time with this. Now, for those of you, I asked you to track your trades. How are we doing on our trades? Drop it in the chat. Like, I'll ask you guys to please track your trades, from last week to this week as you implemented the training that we discussed. Just drop it in the chat, if you're in profit, if your profit is better, whatever you are personally experiencing, since we really broke this down into these levels, I want to know. So drop it in the chat and let's talk about it, okay? Let's talk about it, because the goal here, we're talking about 6 figures in 6 months. But in order for you to obtain 6 figures in 6 months, in order for you to do so, guess what? You have to start, right? You have to start, and you have to start with consistency. You have to start with blue, right? We have to start with those things. And if we don't start with those things, then guess what? We're setting ourselves up if you start compounding before you start with consistency in your trade account. All right, so we need the consistency first. The numbers look good, right? All right, good, awesome. See, I'm getting some comments. I'm getting clarity. The levels are clear. So guess what? It's day one all over again. And so we're just gonna slow it down, and you just take it one day at a time. And as you take it one day at a time, remember, you're only learning this skill set one time. You only have to learn this skill set one time, but once it's yours, nobody can ever take it away from you. And that is really why here with Be Your Own Bank, what we do not do is the fluff. We do not do the whole just all of the stuff to get you over here to where we're not giving you something sustainable to hold on to. And so education, and that's why, even with Be Your Own Bank, what we talk about is a BYOB cash out. An educated trader is a profitable trader. And that's why this is our focus, and this is why. And so I'm glad to see the clarity. I'm glad to see the focus. I'm glad to see, those things, okay? So now that means that should see increase in your trade accounts. And, I know more of you all actually did it, but if you didn't, I still want you to continue to make sure you monitor and you kind of track it. So let's talk about the BYOB cash out strategy. Let's go ahead and dive in, because what I'm going to do, you're starting to see the market structure. Fantastic. I love it. What I'm actually going to do is I'm going to walk you through this. Okay. Now, we talked about it this morning. And, I consistently walk you guys through the strategy, and the steps, where we go from here to time frame confluence, to from here to time frame confluence, to top-down analysis approach, where we spent some time, and then now we brought in the psychological levels. Okay, so all of those things we've been focused on and we've been training on. But what happened, so this is the third time. You're supposed to give somebody credit 3 times, right? So this is the third call. This is the third time I'm gonna give her credit, and I'm telling you, tomorrow I'm gonna take it, because it's gonna be mine. So last night, one of the things that our trading diva said was that she put it in steps. And even though I was speaking it in the steps and I was walking through it in the steps, it's all about how we process information. And so I've gotten, just since I said that this morning, the feedback just from that has been significant. So we're going to walk you through this in those steps, because she broke it down to step 1, step 2, step 3. And so that's just how we process information. So as I said, it was really genius, when she said that. And I was like, oh, wow, because of the simple fact that you guys, that's how we think. That's how I was teaching it, but I didn't use the word step. And so we're going to break it down in that, because a lot of the questions that always come back is, well, time frame confluence, and why are you doing this if we have to do that? Why? Instead of allowing yourself to absorb it and to process it, right? Like I always tell you, you got a complete cake, you got a complete pancake batter, you got a complete cake mix. Don't add stuff to it that doesn't need to be there. And so maybe saying it in steps, you guys will see, because I know you're looking at these charts, you've never looked at them before, you've never seen them before, and it's a process. It is a process. It's a skill set, but it's a process that once you got it, it's yours. Nobody can take it away from you, all right? So let's go ahead and dive in. Step one, right? We're gonna analyze and we're gonna look at the time frame. We're gonna look at the BYOB cash out strategy. Then step two, we're gonna talk about our time frame confluence. Step three, we're gonna do our top-down analysis approach. And step four, we're gonna add those psychological levels, okay? We're gonna make this make sense, all right? We're gonna make it make sense. So now when I'm looking at the strategy, here we are on a 15-minute chart. Now, the strategy can be traded on any time frame, all right? It can be traded on any time frame. There is a reason we start on a 15-minute chart, because if you have not learned your support and resistance, if you're still, figuring those things out, if you're still walking through that, then you're not going to know where to take the trade. Now, what I want you to understand is what we're doing is going to get you 10 pips and cash out, or your first support and resistance line. So what does that mean? After I walk you through this strategy, that if your first support and resistance line happens to not be at the 10 pips, then you don't get 10 pips, right? So because you have what's called a Pip reaction time. Your Pip reaction time is how long does it take you to get into the trade. Also, when you trade, this is what you're looking for. So we're going to actually analyze this one as well, because this is live, okay? There's nothing over here. This is what the market looks like when you dive in. This is what the market looks like when you come to take a trade. This is what the market looks like. However, we're going to analyze a past trade. When you get on the charts, don't go back here, okay? Don't go back here, to analyze. This is the live market for you. We're analyzing historical data because history repeats itself. So what we're doing is showing you how the trade plays out, how you analyze it, and then a played out trade, so you can see that it's actually successful, okay? So what am I looking for? I'm on my 15-minute chart. And guys, if you have questions as we go through this process, I want you to drop them in the chat, okay? Drop them in the chat. So here we have it. Blue line cross over the red and an upward momentum. I have my green candle with a flat bottom, and then I have my PSAR flip to the bottom. Now the green candle, these are Hikanashi candles, okay? Hikanashi candles. And then of course we have our PSAR, which is my dot, which is a trailing stop and resistance. It's called it is a trailing stop and resistance. It moves with the market. So technically my stop loss, because my PSAR is telling me what the market is, my stop loss goes above or below the PSAR depending on how you're trading. So here we go. Blue line cross over the red and an upward momentum. I have a green candle with a flat bottom. Then I have my PSAR flip to the bottom. So we're going to put that right there, all right? We're going to put that right there. And then, okay, now we had a flat top. Let's come over here though and analyze it, because I want to walk you through that as well. All right, now when you're trading, you don't need an arrow. You log onto the charts, you see nothing but this, okay? This is what you see. So we're going to log in, and you log in, and this is what you see. So now here, right, blue line cross over the red and an upward momentum, okay? Blue line cross over the red and an upward momentum. I have my green candle with a flat bottom, and my PSAR is now at the bottom. Over here, let's go ahead and analyze this sell. We're gonna do it, I'm gonna flip time frames at the same time, okay? So here I am around the 80, all right? Blue line cross over the red and a downward momentum right here. Well, that just told us we're not taking this trade, but we'll analyze it anyway. So to see if you even need to wait for it. So I have a red candle. It does not have a flat top, but I do have a PSAR. So now we want to know, is it worth waiting for, right? Are you worth waiting for? So that's kind of what we want to see. So what happens now is we're going to do step two, our time frame confluence, okay? That means we go to the hour first. So I go to my hour. I go to my hour. Now, when I'm on my hour, right, what you're looking at here, all right, what we're looking at is I'm looking for this to be pulling up in a buy. Now, look at this candle, all right? Let's really look at this. Let's dive in here. My stochastic right? Is my stochastic, yeah, right around here. It started curving up. Now I'm gonna tell you market, let's just say it was curving up because we're looking at past and it can be moving up, down. Now, if this is still down, then absolutely not. We're not, we would no, 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 no. I'm gonna just say no, 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 right? But if this has already started its curve and you see how this has pulled back, GBP is the only thing that I can drop down to my 30, okay? It's the only thing. Now, I know on the Tuesday night call, when you look at that, that's not that's, as far as dropping down, because that's basics. So I want to make sure I enforce that I'm speaking to you based on where you are in your skill set. So on Tuesday night is basics. You shouldn't be talking about dropping down. But on this call, we're going to talk about dropping down because this is an advanced call. So as you develop your skill set, there are more things that you can make applicable to your trading and your trading style as you find your zone, as you find your niche, right? So as you find your sweet spot, right? This is what it is. So only if GBP, okay? Obviously I can't with crypto and indices, but only if it's giving me indication that I can drop down. And this candle, you see how this one was protruding and coming down? This one was protruding and coming down. Look at this one. Now look at this candle, okay? And then my stochastic is beginning its curve. So we're going to drop down to my 15. When I drop down to my 15, now you can see how that began moving up, okay? So that's that. Now, when I'm here, let's come back over here. Because what I'm looking for here is a sell. I'm looking for a sell over here. Now this, I'm not dropping down, no way, not no how, right? And I say that because look at my stochastic. My stochastic is going up. It's going up slowly, kind of crooked sideways, right? But it's going up. So I still have a green candle, even though it looks and it appears that I'm getting paused, it's still, my stochastic is still going up. No, we don't like that. So we're not even considering that, right? Now I want to come down to my 5 minute because time frame confluence says go higher and then go lower. I need this to still be buying, which it is, right? Which it is. Now you didn't know this was going to pull back right here. So remember, we're looking at a past tense and this is what it will look like. Now here, right here, while we were waiting, this is not still buying. We already know we're not taking that trade. If once I go to my higher time frame and it's determined that once I go to my higher time frame and it's determined that I'm not taking that trade or even considering it, then I don't need to drop down. Questions, comments, testimonies on any of that? All right, awesome. No questions, no comments, no testimonies. So now let's do a top-down analysis approach, okay? Now I'm gonna squinch my chart up. I'm gonna zoom in a lot because now I'm not looking at the definitiveness of the candles. What I'm looking for is actually what is the market doing? Okay, what is the market doing? And so as I look at this, right, as I see this, then what I'm looking at is, where we are is kind of this halfway point where this has kind of been hanging out. And then of course you can kind of see where the market is. I see my market structure. Remember I told you guys my psychological levels do not take away my market structure. And you kind of see right here, it does not take it away. So let's mark it up. Let's mark it up. So let's come on here, right? And let's put on there. So now let's add my psychological levels. Now, what color are my psychological levels? We made the decision this week that my levels are actually going to be the blue. So now let's go ahead and make sure we do this. And then now you see, it's the more zeros you have, the stronger it is. So you don't have to try to remember the titles, like, oh, it's a, right? You don't have to try to remember the titles. Like, oh, it's a major, it's a minor. Like, I don't have to try to remember those. What I need to do is know where I'm at. Okay, I need to know where I'm at. And so it's just the more zeros, the stronger it is, right? That's what you want to remember. So now as I drop these levels on here, okay, now for those of you all who are not on last week's call, you want to go watch last week's call, because I'm not going to get as detailed as I did last week, but I am going to tell you. So obviously here, right, with this is 3 zeros on the end of this one. Obviously the last one is a pipette. So these are what we would call our minors, because we're not, like, when I get up here, this will be a major one. So from here to 1.4 to 1.3 would be a major one. So in between here are the minor ones, right? So, okay, so, but like I said, that's 100 pip range. So we're not gonna get so caught up in, we're just not gonna get so caught up in that tonight. But go watch last week's, but just remember the more zeros. And obviously everything kind of falls in between there. You got your midpoint, and then you have your quarter levels in there. Now, what I'm gonna ask you guys is, can you see how the market is respecting that? Can you see how the market's respecting that? Right? You can kind of see how the market is respecting it, right? Right, exactly. And so you kind of see that. Now, one of the things, I remember I told you what tool we determine and what tool we go over, and what tool is really going to all be dependent on the way the market moves today. Well, we had news today. So what I'm going to do is, but it really makes sense, is we're really going to get in here. And you say those psychological lines are hot. I love it, because, and it's going to help you with your support and resistance. Let me add this before I go to the I'm gonna add this before I get to the Harmonic Scanner, because it only makes sense. We've used the Harmonic Scanner so much, it only makes sense to start there. So yep, it is a very clean view of the market respecting the lines. So now what I want to show you is in between here, and I'm gonna make this, let me do this. I'm gonna make this yellow. I think this will help some of you guys. So even in between here, we're gonna call them mini levels, okay? Well, we're going to call them mini levels. We're not going to call them but I just want to point something out, right? As you begin. Now, remember, as you start dropping down and you're taking trades on different time frames, and yes, these are yellow. I'm making my chart a coloring book. But like as you start kind of dropping down and doing those things, right? What you're beginning to see, right? So now look, so let me drop down. I want to drop down. Let me help you open your eyes a little bit more. So now you see that my zones that fall in between here, look at this. So in between this one to this one, right? That's 10 pips, right? So in between each one, this is a 10 pip range. So if I go to take a trade, like let's say I get a trigger, look, this just trigger for itself. So like, let's say I get a trigger, all right? And I take this trigger, and so should we just do it? Should we just do it? Let's make this one red since it triggered for itself. All right. This is what I want you guys to understand. We're not going to take a trade unless the trade is actually there. Let's analyze this. It's a tool, right? So it's not, we're in compliance. So you see that it's still around that level, right? It's identified around that level. And so, but it's also triggered on the 5. And so this just came out. And so this is a valid trigger because you can see what was happening right there. My stochastic is also in a buy. Okay, my stochastic is also pushing up. Now let's go ahead and check our 30. All right, my 30 is in confluence, right? So I'm not, we've already kind of walked through this, but look, my 30, but it's, what I don't like is you can see it's starting to. So once again, the trade's not ready, but I'm just trying to make a point to you right now. All right. We already know we're not taking it because my stochastic here is in a buy. This sale has ultimately been halted. So for whatever reason, the market is paused right here at this current time. So we already know we're not taking a trade, right? Look at my 4 hour. We already know we're not taking a trade. So, but I just want to kind of highlight something. Let's say it was a valid trade. Let's just hypothetically say that we have a valid setup, okay? If I was to take this trade, right? And I'm telling you, trade to your first support and resistance line. If I got in between here, then this is what I want you guys to see, because this is what happens, okay? And I want to help you increase your accuracy. So I'm using this tool. I come in here, like let's say everything's set up in here and it's set up for a sell. And you write PSR flip, flat top candle, confluence, everything is there. What happens is you come here and push the button. Your Pip Reaction Time got you right here. And then what happens is you go on your MetaTrader 4 and you enter it and you're trying to do 10 pips. Well, this is a 10 pip range, right? Look at the rejection to my left. I need to pay attention to that on everywhere I am. So this is where you guys try to do, and you'll try to put your take profit down here somewhere. Well, guess what? The market might stop right here. So when I said to you guys, sometimes you might not get a full 10 pips, and you have to be okay with that, because technically the strategy was analyzed properly. Technically that entry point was on point. Not your entry point, but where the market began moving. But you have a pip reaction time. How long does it take you to get into the market? How long does it take you to push the button? What is your trigger finger, right? What is your trigger finger? Because you got to be quick on it. How fast is it? Guess what? If it's low, it's okay. But you still need to know where to stop. So somebody might get 15 pips, you might get 5. Guess what? Oh, well, you got 5 pips. But you want to live to trade another day. Let's live to trade another day. So you have a reaction time, especially as you're scalping. So now you see, even if I'm scalping, I still need to know what the market's doing. Like, I still need to know what the market's going through. I still need to know. So just because I'm doing 10 pips does not mean that I don't need to know. And that's why some of you all will be hit or miss. And every time I've ever had a conversation with anyone where people are hitting the 10 pips and you're not, is your pip reaction time. So it's very important. You might just have to stop the trade right here. Make your take profits end in 0. Make them end in 0. Don't put, just make them into 0. Let's try that. Just make it into 0. The more zeros, the better. And I'm not talking about the pipette. Okay, I'm not talking about the pipette. So good point. Thanks for stating exactly. Live to trade another day. So you want to, so make it in. And I'm not talking about the pipette. I'm just saying, okay? I'm talking about the pip, where the pip started. So I just wanted to point that out. So now, one of the things that, not today. One of the things that we discussed is the tools, okay? The tools and how the harmonic patterns happen at that area, right? The harmonic patterns happen around psychological levels. So because that's one of the things that we pointed out, that's one of the first tools I do want to utilize. So now, once again, if you have a question about what I'm doing, I need you to drop it in the chat, right? We have interactive calls. So you can see I can come through here, and the way the Harmonic Scanner works, for those of you all who are new to us or have never seen this. So first and foremost, let's talk about where you get your tools. So I come into IM.Center and I'm going to click on strategies. Okay, I'm going to click on strategies. When I click on strategies, you come down here and you see you have access to everything, right? You're going to have access to my Forex. Now, I'm not where the education is. Where I'm at is in the tools, right? These strategies. So HFX, I got my digital currency, right? So this is where all of that is. So when I come here, all right, when I come here, you have access to all these beautiful, colorful buttons, right? They're beautiful, right? So Harmonics is right here. They even have a vibrato in here. The one we're at is imlwebanalyzer.com. That's the one we're at. But here, you can see this one actually says Harmonics. So when you click the Harmonics, this is going to open in another tab. Now, I think with these psychological levels, you will understand why I do the hour. I've explained to you guys why we do the hour consistently. I've walked you guys through why we do the hour all the time. We've used it for support and resistance lines. We've used it, and I've talked to you guys about how there's patterns inside of patterns, market inside of market. But what we're going to do is we're going to analyze one of these, and maybe 2, depending on the time. We're going to analyze one so you can understand how to effectively use your tools. One thing I definitely want you to understand is that the Harmonic Scanner is not a standalone tool. All right, it's not meant to be standalone. And if you don't have it and you're trying to trade and mark this up, you are absolutely wrong. And I say that because let me tell you why. Now, here you have your different brokers, okay? Now, the trades that are playing out, look what CHF played out. So the trades that played out, they're down here. So they used to see, look, see, I told you something, CHF, boy, it didn't even have a harmonic pattern on there anymore. So let me stop hating on CHF. So, but the ones that played out, right, is down here, right? You can kind of see how this one's already played out. It just has not fallen off yet. So you do have some that will come, and this one's played out too. So you do have some that will come on here, and look, all of them played out except for the top two. So the new ones always phase into the top, but you will have some that's in process, or if they don't play out, then they fall off. And you also can't come in here and mark this, you know, so we don't want to do that. Let's be realistic about it. So I mean, this is just how it works. You can kind of see it played out. So they don't have, you can see where it's already passed. You see where it's a entry, take profit 1, 2, and 3. So if look where my candles are. You see where we had our entry point right around here. Take profit 1, take profit's already got here. So now it's just watching the market move. So the ones down here, right, it's just still going, right? It's just still going. It's just still going. Look, it's the market's just still going. But up here, they haven't. You see the harmonic pattern, like we've been watching GBP USD all week, and they got caught in that range. It never came down here. So eventually this one, as the market more patterns get pushed into the market, they're gonna go away. Does it matter what broker you pick? No, it doesn't. But you can see GBP USD is on almost all of them. Also, I've told you before, I don't want you caught too much on these numbers. These are based on fibs, and sometimes they're different. Sometimes they're exactly the same. Sometimes from one broker to another, they're a little different. So remember, Fibonacci's is based on percentages, but those percentages are based on swing high, swing low. So where do I draw my fibs compared to where you draw your fibs? So that's how Fibonacci's work. So what we're gonna do is I'm gonna actually take, I hope it's still on there. Yeah, I'm gonna take this AUD JPY. I already wrote down these numbers, and we're gonna come over here. So for AUD JPY, all right, you notice that, remember I said we could trade on any time frame. Here we are, we're on the hour because we pulled it from the hour. So what I'm gonna do is, this is that entry, right? You see that's already marked up. This will be, now I'm gonna say this up front, and I'm gonna say it in the middle, and I'm gonna say it at the end. Do not blindly take these. Do not blindly take these. Don't just enter because it said enter. You have to do your analysis. Everything that we show you on how to utilize the tools, do not eliminate your analysis. Now, what I will tell you is I do like the harmonic patterns to bring it back over here, because it really helps you begin to perfect your skill set. And that's why I want to take my time with this, okay? So it really does help you. I really believe this helps. By combining all of this, I think it really helps you start seeing the market, okay, from a larger time frame, not just from the 15-minute chart, but understanding it from a larger time frame, okay? So let's go ahead and mark the rest of them up. So that was that take profit 1. Now, this is gonna be that take profit 2. All right. And let's put now take profit 1, take profit 2, take profit 3 does not mean that's your personal take profit 1. It just means that that's the first support and resistance line it has the opportunity to grab. That's the second support and resistance line it has the opportunity to bypass. Then it's the third support and resistance line that it has the opportunity that it will swing high to, right? So that's what that means. That means this is the first one based on market structure, based on fibs, right? Because the fibs is gonna be my swing high to my swing low. So if I'm looking at this, my swing high to my swing low, I would bring the Fibonacci and I would put it here to here, and then it'll be based on the now I don't even use it that much, but just so you guys can understand, because I'm really trying to give you big picture. So if I look, right, depending on where you drop this and I put my fibs on here, you can see that my take profits are around those Fibonacci levels. So the first one at the 23% is around here. The second, my 38% is up in here. You see how the market pulled back right there. 50% is where they got that second take profit. 78% is where they have that third take profit, okay? That's how you use fibs. Now, we've already talked about this. You've never seen me draw a Fibonacci before. Don't get excited because I probably won't draw one again. What did I just delete? The wrong thing. All right. So now you saw Fibonacci and you understand how the harmonic scanner uses those. But what we're going to do now, that's the line I deleted. I deleted the wrong thing. Questions, comments on that? So I tell you, I know how to do the stuff. I like the zone. I personally like zones. So now as we look at this, okay, let's see here. Yes, I put a fib on there. I did. So as I'm looking, all right, so let's see. So as I'm looking, so that's that first one. So now let's put our psychological levels on here, all right? So, but do you see how the market is respecting? So we still would not take a trade until everything kind of laid out. So we can see my harmonic. Let's look at this. Blue line cross over the red in an upward momentum, right? Green candle, definitely not a flat bottom. PSAR right there at the bottom. 4 hour is now where my confluence is. Definitely not ready, but you're going to have a little bit more discernment on the higher time frames, because when I'm on my lower time frames, the candles is 15 minutes, the candles is 30 minutes, the candles are an hour. Here, this candle is 4 hours. So what is the possibility of this actually turning all the way green? This is where you have to, if I'm trading on a higher time frame, this is why we start you on the 15, because you have to understand a little bit about market structure, all right? You have to. There's no ifs, ands, and buts about it. What I can see is my stochastic starting to curve up. What I can see is that red candle. That's what I can see, all right? Now, if I drop down to my 15, I also can see that I had a blue line cross over the red. This is where you guys start trading. Blue line cross over the red in upward momentum. I have a green candle with a flat bottom and a PSAR flip. Woohoo, look at there, look at there. Go to my hour, I have confluence, right? So go to my 5 minute and it's still buying. So what do you see here? It came up, we had some pullback, and now it's pulling up. So it looks like, let's check the news. We always check the news regardless. Let's check the news. So 11 o'clock. Okay, that's at 11, 2300. What do we have? That's already passed. So I was like, maybe let's make sure we have no news before somebody jump in the trade. So, so what you're seeing is that's actually still buying, okay? And so you can definitely see that, right? And this is a new candle. So not new, it's like 8 minutes new, but you can see what we are in the market and you can see what's happening, okay? So I already know some of you guys will grab it. That's all I'm saying. So now, do you guys see how, what I'm trying to show you is how the time frames pull together, right? How they flow together. But I also want to focus on, let's go get some of these psychological levels, okay? So now, here we are, obviously, we are talking about JPY. So let's grab this, 82. So I know it's kind of color bookish, but we're gonna make that blue. So you see the zeros behind there? So that means that down here somewhere is an 81, right? So that's around that time. So from here to here, right? From here to here, that's where my 100 pips lie. So you're looking at how much liquidity, because that's a nice little wide gap. Like if I was on GBP NZD, it's not that far. You know what I mean? GBP NZD is a lot tighter. There's a lot of currency. So it also helps you see the liquidity that's in there. So now let's kind of put this at that mid-level point. So you can see we kind of already passed that, right? All right, so you can kind of see where that mid-level point is actually, where is that? Right, My mid-level point is actually down here around my entry point, okay? So you see how it identified, right? That's where that's at. So if I come back up here to my higher time frame, okay, let's look at it. Around here is where I have a minor level. Okay, that's where I have a level at. And so because it has more zeros, it's going to be a stronger level. So it's possible this will buy up to around here. If it gets past this construction zone over here, you know, we'll buy up to here. But that's also a point that you want to pay attention to, because if it's strong, look where my take profit is. This kind of goes with what I was just explaining to you on the other one. If this is my take profit that the Harmonic Scanner gave me, and then even if we come here and put my line chart on here, I come put my line chart on here, and when I put my line chart on here, you can definitely see everything is set up. But then you know how sometimes it just might not reach it. Not saying it's not gonna reach it, but you know how sometimes it get close, but it's just not quite there. Well, this is why, because of this level. So remember I said if you make your take profits in zero, right? The more zeros, the stronger it is. Well, this is that indication. So right here. Questions, comments, testimonies before we keep going. Questions, comments, testimonies. See, that's 50 pips from that one to that one. No questions, no comments, no testimonies. Y'all quiet tonight. I know y'all made some money. Ah, awesome. Great info. You are welcome. I know you guys made some money. I'm just trying to put more money in your pocket. That's all I'm trying to do is I just want to put some more money in your pocket. That's all. All right. So let us see. All right. So let's go. And so now you can kind of see, like when we drop these levels on here. So, right. So even in here, right, we talked about those. Wait, let me go. So I'm not going higher than this one. I don't want to go higher than that one. Like make sure I stay in my zone, stay in your zone. So in between here, I actually wanted the 5, 0, 0. That's what I was trying to do. So that's what I was trying to do right here. I was like, no, not higher, lower. All right. So when we get right here, okay, you can see that that's around my third take profit. And once again, look at this. Okay. What did I tell you guys last week? That sometimes it's still considered a good trade if it doesn't reach all the way up there or it closing a zone, because that's where orders take place and that's where our spreads widen, right? Because, right, that's where orders are taking place. So there's a lot going on in there and our spreads widen in there. So it's not going to always come here. So you notice that when we're trading or when we pull these, what do you always see me do? I'll take my yellow. I don't want to move the blue one. I want to grab the yellow one. I'll take my yellow line and I'll kind of move it around. You see how like you'll see me do it like this, as opposed to kind of leaving it up here. Well, now you know, now you've been empowered, because there's no way I'm leaving it up here. It's absolutely no way that it's absolutely no way I'm leaving it up here, because I have to pass up a psychological level and I have to pass up an area where I saw all these wicks right up in here. I will have to pass that up. So no, what I'm doing is I'm readjusting my take profit, and you have to also consider your personal broker spread. So I'm readjusting my take profit and I'm bringing it down. So does that make sense? That makes sense, guys? Awesome. So do I have any questions, any comments, any? Oh, okay. Well, now see, we're on the same sheet of music. That's what I was asking the other day. We're on the same sheet of music now. Awesome. So, and then of course, I want to respect those mid-levels. So that's kind of how this works. And so now you know how these kind of work together. We just got a new 15-minute candle. It's still rising. I know you haven't taken a profit yet. I know this is a training call, but I also know some of you guys might have been like, well, you know. Well, let me see. Have you taken a profit? How much is this covered? Well, you're almost there, depending on your Pip reaction time. You're almost there. So, all right, let's go. Let's go, let's go, let's go. Let us look at USD Cad was another one that they did. So we're gonna go ahead and analyze that one. Let's do one more. Let's do one more. I think I'm doing one more. You know, you actually have to put your hands on the keyboard the right way if you want to do one more. So, all right. So now let me see. I might get one. I don't want that thing in my way. I want it clear. So yeah, let's come here. All right, so I'm gonna come here to my hour where we pull it from, okay? We already know the strategy. And so let's go ahead. So this is a harmonic scatter. It's harmonic, I said scatter, a harmonic scanner that a trade from the harmonic scanner, right? We just walked through it. I'm not gonna take you back to the harmonic scanner. But what I do, as you can see, this is what I want you guys to do. I want you to write down, go in there and write down the numbers. Go write them down. All right? Go write them down. And this is one of the ones that actually have the 2 entry points. Now I'm putting the entry points on here that I never put entry points on here because, but I'm doing it for the sake of training. And I want you guys to be focused on the right time to enter. But also when it has those, it's a possibility that what it's saying is the market might just quite pull up just a little bit more, right? So let's just put all these on here. I'm trying to slow it down as much as possible, guys. So I promise you, I want everybody who is on this call to grasp it, to understand it. And if you can understand it, right, then yeah, I just really want you guys to understand it. I just do. So what I'm gonna do for the sake of, right, I'm gonna do this. So we actually trying to hit that clone, but did I lose it? All right, so I just wanted to make sure we know that that's actually the entry points that were identified and not the actual take profits. These were the take profits. So now what we're looking, when we go to the harmonic scanner, we pull it from the harmonic scanner, we bring it over here, you see my entries, right? Like you can kind of see my take profit 1, take profit 2, take profit 3. So what I can see is my market. I always tell you guys, come up here and look left. Now, trust me, when I started trading, something brought this back to memory in a conversation the other day. But I know you hear it all the time. I was always told, just look left, look left. My son started trading at the same time I did. And he'd be like, Ma, just look left. And I'm like, look left. I know how to look left, but what am I looking at? So I already know, right? Look at the take profit. I already know that some of us don't see it initially up front. That's the point I'm making. Because it took me about 6 months to see what left meant. Like, what does this mean? Like, what are you looking at? And so that's why we're very deliberate about making sure that when you guys do it, we say, hey, look left, and we come through and we really are deliberate in making sure that you guys see these things. And trust me, I've only been trading 3 years, but I just told you out of those 3 years, 6 months, I couldn't even see a support and resistance line. The market didn't even start making sense until I started seeing support and resistance. So when I tell you that this is your lifeline, you want to learn it, okay? Don't avoid it, embrace it, and go get it. So now, and so that was my personal, yes, only 3 years, but 6 months, 6 months I wasn't trading because I didn't see nothing, right? It wasn't, BYOB Cashout was not here then. So it was not trading. I was like, it was blue clothes. And so you already know what blue clothes do. So it give you a few dollars here and there. So now, oh, well, thank you. So now as I see this, right, so you can see this. And so now what I'm looking for is you see the 1, the 2, and the 3, right? So those are my take profits. But I can see when I look left, you're looking for how the market reacted to that, right? You can kind of see, right, how the market reacted to those areas. And so the market respected those areas, okay? That's what that means. So now you understand why it identified, because my swing high, this actually had a swing low to swing high. And so you always look, you want to kind of, the market structure should close back out. And then sometimes it'll break through. But you notice when this came down, it came back up and then it broke through. So you know what I mean? So, right. So now let's look. So now let's come look at this, and we're gonna put our levels on there, okay? We're gonna put those levels on there. Let's go put these levels on here. And so I'm a, kind of look, because what do we have? I have 2 zeros right there. So that's why I kind of widen that up. And we're gonna make that blue because we wanna keep the consistency, with what we're learning. So blue is a color we never really used before. So we're using blue. So we'll be using blue on the calls. All right. So now you can kind of see where that is. Okay. So right there. And that's, 26. And then obviously my 25 is somewhere that is down here in that area. So doesn't that look like it's kind of closing out that range? You see what I mean? Doesn't that really look like it's, from here to here? Now, you can see where it actually touched up here, right? It kind of came up here. And look, it's trying to come back down. So it gave us these 2 entry points. It's always above or below the PSAR. It never changes. The stop loss is always above or below the PSAR. So we're not in this trade. Please don't take this trade. All right. So now I'm sure from this perspective, even if I would have came here, speaking of taking a trade, if I'd have took this previously where I have my blue line cross over the red and the downward momentum, for those of you start on the 15, red candle flat top, PSAR flip. So if we're analyzing on the hour, there are still going to be times where you go trade on the 15 and that the hour never manifests, right? It never manifests. Now, I remember what I wanted to tell you, because it has to still pass that last significant level. Us understanding, I've been deliberately building. So, but us understanding us understanding the psychological levels does not mean I get to ignore the strategy. It doesn't mean I get to ignore the market structure. It doesn't mean I get to ignore, right, passing the trend changes, passing my last significant levels. It doesn't mean I get to ignore those things. So here, right, when I'm looking here and I have that red candle and I had that PSAR flip, when I come here, right, in my hour, I actually had confluence. So when I look at how many pips this covered, okay, you would have got your 10 pips and cashed out, or to that first support and resistance line. You would have already had that. But at the same time, if I'm looking at trading from a higher standpoint, the higher time frame is that this trade never manifested from up here. Now, what I can see is it's definitely rejected in that area. And so when you have those 2 entries, where am I at? This one I'm actually around. This one is actually right here at one of my quarter levels, right? So you can definitely see how this one is around that major line, that major rejection, and now this one is around my quarter level. So you want to pay attention to these levels. You want to pay attention to it. Like, we want to pay attention to it. And so the only thing I would tell you is kind of like what was said last night, is if it was 2 things I wanted to make sure I highlight. So you notice how here it didn't quite make it, and here, right, it didn't quite, like when I was showing you up here, how it didn't quite touch those psychological levels. One of the things I want to highlight is, like, if you're doing HFX or you're doing something like that, you're gonna have to really dive in and pay attention to what do we named them the many levels, because, right, the support and resistance lines, and utilizing the line chart, kind of the way that Ms. Brownlee does it, because the reason why is it might not touch these levels. So I'm saying that to tell you guys that it does not replace what we've learned. This is to enhance what we've learned. I want to be very, very and deliberately clear. All right. So even if you see, like if I'm coming down here where I was taking this sell, it had to pass that last significant level. So like even for me taking this trade, you see it was impulse, like impulse correction, continuation, it kind of went up. You see where we had the correction and it went up. In order for me to feel like I'm gonna hit my take profit 2 and 3, I need to pass this level. It might get here and stop, but I have to pass that last significant level. And you see it has not done that. Right, exactly, extra confirmation. It's like an added layer of security. So it's not to replace, because if I'm up here looking, the market is rejecting here. Now it is rejecting at a level. So it's really helping me see. It's helping remove the blinders, right? But you would get here and you feel like, oh, well, I'm gonna just take a trade down here to 23. Well, I'll be like, well, go right ahead. Just be bad and don't analyze nothing, right? It's not a guarantee that it's gonna do that. Like, oh, okay, just go right ahead and go to 23. Why are you doing that? You know, why are you going to 23? Help me understand why you're doing that. And you guys, I don't know, it's just that's the levels. It go from here to here. No, we're not doing that. We are going to analyze the market and analyze a chart. And so because of that, because you guys might just drop this from here to here and not start ignoring stuff, this is why I wanted to do the harmonic scanner first, because this helps you identify the market structure as well. I really believe that combining those two tools, you know, oh, you're very welcome. I really believe that combining these two tools really help you start seeing the market structure. So it helps you start seeing, right? It helps you start seeing. Now, as far as the stop loss is concerned, as far as more clarity, the stop loss is always above or below the PSR. So you're the second person mentioned stop loss. I know you're saying it gives you more clarity, but because of that, let me come to over here. So you can kind of see that if I'm on the hour, that means my stop loss is up here somewhere. All right. But I'm not entering here. You know, even if I enter on my 15, I need to respect the hour because of that pullback opportunity. So this is where you have to understand your risk, man, your personal risk. Okay. Your personal risk, because we trade for what we're willing to lose, not for what we're looking to gain. So when you do your percentage, your risk percentage, whether you're using the HFX compounding sheet or whether you're using the classic trading or low frequency Forex, because that's really what this is called, it's low frequency Forex. So if regardless of which one that we're using, then what you want to make sure your percentage, whether it's a 5%, a 2%, a 10%, whatever it is what are you willing to lose? Because the money's going to come to you when you chase the skill set. So you build your account based on what you're willing to lose, because there's still that 8% in there, right? So we don't need a trade to take us out and we be mad. Anytime you touch the markets, anytime you touch the charts, I'm gonna tell you how to eliminate your emotions. Like, have you ever gone anywhere or done anything and it's like you give some money away or you do something and you're like, oh, well, you know, like it's gone? That's how you need to see your trade account money. When you put it in that account, it does not need to be money you're emotionally attached to. That money that you drop in this trade account, this is how you're going to eliminate and trade with more clarity and understanding. Because I want you to do the 6 figures in 6 months, but I want you to do it responsibly. Okay. I want you to do it. Don't chase the 6 figures, chase the skill set. Okay. What you put in your trade account has to be money that you're not emotionally tied to, meaning it's not your rent money. It is money you're not emotionally tied to, because that's gambling. That's, oh, I'm gonna flip it. No, we're not flipping nothing. We are compounding and we are going to walk in wealth, but we're going to do it responsibly. I'm not talking about drinking responsibly. I know BYOB, no, we're talking about be your own bank. So we're going to bank responsibly, okay? We're going to be big bank. We're operating on big bank frequency, okay? That's what we're operating from. So guys, I promise we will, we'll go over this again because I want you guys to get it and grasp it. I know I said we're going to dive into tools and do all of those things. We are, I promise. But I really want you guys to receive that. So you say that's important. You had to remind yourself, lower your lot size to match how much you can lose opposed to how much you were looking to gain. Thanks for stating it on this call. You're very welcome, because I want us to bank responsibly, right? Hey, we big bank frequency, right? So, all right, guys, it is my time. It is my time. So if you got any clarity on this call, if this helped you, let me get an 888 in the chat. I really want you all, right, to please track your trades, right? I saw some of you all paying attention. You got infinity. I got some of you guys tracking your trades. I got some of you all. I need all of you all to do it. All of you all need to track your trades. All of you all, because I need you flooding the chat. I need you operating on big bank frequency. I need us banking responsibly at the same time, okay? So with that being said, ladies and gentlemen, it is my time. So what